Greetings, and welcome to the High Flying Tutors Academy channel. Today, I'll be helping you with the asset disposal question, where we're going to calculate the depreciation utilizing the diminishing balance method. And the other term for diminishing balance method is reducing balance method, right? So this is our question. And then here is our answer sheet. And then on the other side, we have our worksheet and calculation sheet, right? So without any waste of time, let's start with this question. Let's go back to the question right there and start going through the question. Samsonite traders. The following information was extracted from the books of Samsonite traders on the 1st of March 2014. Equipment at cost price amount to 2,800. Accumulated depreciation on equipment amounted to 543. On the 28th of February 2015, Samsonite traders sold used computer printer for 720 cash to Mr. Dexon. The cost of the computer printer sold was 900, and its accumulated depreciation amounted to 164 on the 1st of March 2014. Depreciation must still be provided as follows: equipment 10% per annum, diminishing balance method or reducing balance method. And then you are required to prepare the following ledger accounts properly balanced off for the year ended 28 February 2015. Equipment account, accumulated depreciation on equipment, depreciation account, and asset disposal account, right? So without any waste of time, I want us to go to our answer sheet, actually our calculation sheet, to outline the period first. Financial period. Financial period is going to be usually we start from the end, 28 February 2015. And then when did I start, or when did we start? We started on the 1st of March. The 1st of March 2014. So that is our 12 months period, right? That is our 12 months period, okay? And then secondly, because we are going to be working with the depreciation, I want us also to outline the method that we are going to use when we calculate the depreciation, which is going to be diminishing, or the other term for it is reducing. Diminishing or reducing balance method. All right. And then what does it say? It says cost price you multiply by the cost price you less accumulated depreciation you will get your carrying value. From the carrying value or the carrying amount, you multiply by the percentage provided or given, multiply by the number of months, which is the period, you divide by 12. You divide by 12, that will give you your depreciation. That is the formula to calculate depreciation utilizing the diminishing or reducing balance method, right? So now, after this, when we come back here, we are just going to calculate the depreciation based on the asset that we have, right? So the asset that we're dealing with here is equipment. Back to our question, right? Number one that we need to do, we need to prepare in equipment account before we calculate depreciation. We'll calculate depreciation when we are about to prepare the accumulated depreciation account and depreciation account, right? But for now, let's start by preparing our equipment account, right? So now they're saying the following information was extracted from the books of Samsonite traders on the 1st of March 2014. Equipment at cost price amount to 2,800. That is the opening balance of the equipment that we opened with on the 1st of March 2014. So it means we have to go to our answer sheet right there on the equipment account and say on the 1st of March, there was the balance brought down of 2,800, right? Okay, and then we go back to our information or our question. They say accumulated depreciation on equipment amounted to 543. We'll come back there when we deal with accumulated depreciation, right? Let's go to the next information. The next information says on the 28th of February 2015, Samsonite traders sold a used computer printer for 720 cash to Mr. Dixon. The cost of the computer printer sold was 900 and its accumulated depreciation amounted to 164 on the 1st of March 2014. But how much was the cost price of the sold computer printer? It was 900. This is our asset disposal. That must go to, remember, it must go to our credit side of the equipment account. That was sold on the 28th Feb, right? We're gonna come this side and say asset disposal. Asset disposal, right? Then the folio is gonna be general GJ, that amount to 900. That is the cost price of the asset that was disposed, or the equipment or the computer printer that was disposed, right? And then we are done right there. Let's go back to our question again, just to double check. Do we have any other equipment that we have sold or bought? So according to the information, we had a total of 2,800 equipment, and we sold one of the equipments that cost 900, and there's no any other additional equipment. So it means we only have to deal with two things: old equipment or remaining equipment after selling the other one, and the one that was sold. Those are the things that we're going to deal with. So there's no any other information here. So we need to close our equipment account because we only have these two. So when we check here, the bigger side, obviously you can see, is the debit side by 2,800. 2,800, right? $2,800. Let's just do that. 2,800. Balance there, even this side is going to be 2,800. Okay, and then the difference will be the closing balance. The closing balance there, balance carry down. So on the folio, carry down of how much? So it means we have to say 2,800 minus 900, right? 2,800 minus 900. So let's put that on the calculator quickly. So it's going to be 2,800 minus 900. I am getting a closing balance of 1,900. So that is the closing balance or the remaining equipment we have. That this closing will also be opening next year on the 1st of March. Balance brought down, which is going to be 1,900. So this closing will be opening on the other side when we open next year, right? So when they say on the question, right, when they say to you, you prepare the following accounts and properly balanced, it's also part of indicating the opening balance of the following year, right? It's important. So this account of equipment right here is properly balanced. And we are done with equipment account or asset account equipment, right? So now we are going to prepare what the accumulated depreciation account, the accumulated depreciation account. Remember, we will have opening on the credit side. So it means we are opening, obviously, is 1st March, right? First March there. And then it's gonna be balance brought down. Balance brought down. Remember, opening balance, the date, our financial period started on the 1st of March 2014. So we're going there. We're going to check opening balance of accumulated depreciation on that date. So this is the opening date there. And the information below indicate the opening balances. So we are done with the equipment. Now we are on a accumulated depreciation opening, which is 543. Right, so we're just gonna go to our answer sheet and put 543. That is our opening balance. That is our opening balance. And then going forward, we need to calculate. Depreciation account. We need to calculate depreciation. We need to calculate depreciation to close off all these accounts. We need to calculate depreciation. So remember, depreciation is going to be calculated on the diminishing or reducing balance method. And number one, we are going to calculate depreciation for sold. We are going to calculate depreciation for sold. That's number one. Depreciation for sold. Depreciation for the sold. That's what we are going to do. Depreciation for the sold. So depreciation for the sold. Remember, the sold equipment was dead for the whole year because the information or the question says on the 28th of February 2015. And remember, this date of the 28th is the closing period, right? Samsonite traders sold a used computer printer. So Samsonite traders sold a used computer printer for $720. So that means that equipment was there for the whole year. So it means we have to calculate depreciation for the sold for the whole year. I don't know if you get my point right there. So let's go to our answer, our worksheet. Our worksheet. So when we get to our worksheet, remember, you have to calculate. So number one, the sold equipment cost price is 900. Remember, 900. You're gonna less the accumulated depreciation of this. How much was the accumulated depreciation at the beginning of the year for this equipment that was sold? It was its accumulated depreciation amount to 164 on the 1st of March 2014. So it means we have to say, come this side and say minus 164. So now how much is our depreciation for the carrying value? How much is the carrying value right there? Let's do the carrying value first. It's going to be 900. You less 164. And I got 736. Then 736. Then from there, you're going to multiply by the percentage given. So let's go and check how much was the percentage given in our information. You are given 10%. You are given 10% for depreciation. 10%. So it means we are going to say on the other side, multiply by 10 out of 100, multiply by 12 out of 12, because the equipment, remember, it was there, or the computer printer was there for the whole year, because it was sold right at the end of the period, or on the last day of the financial period of the business, right? So from there, we are going to say multiply by 10%, 10 out of 100, multiply by 12 out of 12. And then I'm getting 74 because I'm actually getting 73.6. So, but remember, on the question says down there, the information provided, it says round off to the nearest rand. It means we don't want cent, because this, what we are getting on the calculator is 73 rand and 60 cents, but we don't want 60 cents, so we round off to the nearest whole number, right? Which is going to be 74. So the depreciation for the equipment that was sold for the period 1 March 2014 to 28 February 2015 is 74 rand. Okay, and then we are done with the sold. Now we are going to calculate depreciation for the remaining equipment. Depreciation for the remaining. Usually others, you call it old equipment. Depreciation for the remaining or old equipment, right? So now, what do we do now? Remember, we need to calculate the new cost, because now remember, the old cost was first. That's what we must do. First, we must calculate the new cost. The new cost. So how much is the new cost of the remaining cost after selling? The new cost or the remaining cost after selling. So the remaining cost, let me just call it the remaining cost, not new cost, so that it cannot confuse people, because after selling, we are remaining with a different cost. So I'm going to say remaining cost. So remaining cost is going to be the old cost of 2,800 minus the 900 of the sold cost. Right? So how much are you getting there? You are getting let's do that on the calculator. I think it's going to be 1,900, right? So that is the remaining cost. And after calculating the remaining cost, we also have to calculate the remaining accumulated depreciation. The remaining accumulated depreciation, right? We have to calculate the remaining accumulated depreciation. So to calculate the remaining accumulated depreciation, we are going to say depreciation at the beginning of 543, we less, right? Let's go and check there. We less, depreciation at the beginning for the sold, which is this one, right? Which is gonna be 164, right? And then it's equal to, then how much is the remaining depreciation? Let's put that on the calculator quickly. So it's going to be 543 minus 164. So I'm getting a remaining depreciation of 379. So now, after getting this remaining cost and the remaining depreciation, now we can calculate depreciation for the remaining equipment or old equipment, right? So when we calculate, it means now our remaining cost is going to be 1,900. We less the remaining accumulated depreciation of 379. How much is our carrying value? Remember, we are following this formula to calculate depreciation right there. And then it's going to be how much? Let's see. So it's going to be 1900 less 379. Then I am getting I'm getting a carrying amount of 1,521. From there, I'll multiply by 10%, I'll divide by 100, and then remember it was there for the whole year, 12 out of 12. It's remaining for the year as well. So multiply by 10 out of 100, multiply by 12 out of 12. Let's see how much we are getting there. 1,521 multiplied by 10 out of 100, multiplied by 12, divided by 12. So I am getting a depreciation of 152, because I'm getting actually 152,1, of which we have to round off to the nearest rent or whole number. So the depreciation for the remaining is 152. All right, and then now we are done with calculating depreciations for all these vehicles. What we needed to do now is to calculate depreciation for the accumulated depreciation. Again, we need to calculate accumulated depreciation for the asset disposal. We need to calculate depreciation for the asset disposal. That will go to your accumulated depreciation account and will also go to the asset disposal account. So accumulated depreciation, for sold or for asset disposal, or asset disposed, right? So the accumulated depreciation for sold or asset disposal or disposed is going to be the opening balance of asset disposal, accumulated depreciation, opening balance of the accumulated depreciation for sold, plus the depreciation for the current year of 74. How much are you getting right there? Just put that quickly on the calculator. So 164 plus 74, I'm getting 238. I'm getting 238. 238 is the accumulated depreciation for sold, right? So now we are done with everything we need for depreciation. We are done with everything we need. So now we need to go and record. We need to go and record, right? So to record, we are just going to our accumulated depreciation account. One, we have to record depreciation for the period. So we're going to go to the debit side right there and say depreciation. Right? And then depreciation one, we put in brackets, we've got depreciation of the old, which is 152, plus depreciation for the current year sold vehicle, equipment, to say not vehicle, equipment of 74, right? So how much is the depreciation right there during the year? Let's see that quickly. So it's going to be 152 plus 74. I'm getting 226. 226. That is your depreciation for the current year, right? And then after calculating depreciation for the current year, we are done with that. We need to close the account. But before, remember, this depreciation is for the 28 Feb, right? 28 Feb. Just put the correct date right there. All right. And then we also have to put accumulated depreciation on the 28th of February for the disposed, right? So depreciation for the disposed is going to be asset disposal there. And then we are going to take, let's go to the answer sheet. The worksheet. we are going to take 3238 is going to be the accumulated depreciation for the sold or for the disposal. That will go on the debit side of the accumulated depreciation account. The folio there, let's just put general, even here, general, right? And then here we're gonna put the amount is gonna be 238, right? And then we are done. We no longer have any other depreciation. So what we need to do is to close off this account. So let's close off this account. When we close off this account, we're just gonna check which side is bigger. Obviously, when we check, the bigger side is the credit side. So we're just gonna add the credit side together, which is gonna be 543 plus 226. And then I am getting a total of 769, the balance there, 769. So even this side on the credits, on the debit side, I meant to say is gonna be 769, right? And then we will have to close this. When I say balance, so that all this side, the credit side and the debit side are equal. Balance, carry it down, and then it's gonna be 769 minus 238, of which I'm getting a closing balance of 531. Closing balance of 531. And this 531 balance is also going to be an opening balance for the following period for the remaining equipment, which is going to be balance brought down of how much? Of 531. Then we are done with the depreciation, accumulated depreciation account. This is our accumulated depreciation account. I hope you saw how we got this one, and I hope you saw how we got this. This is the depreciation. So I hope you guys will understand this better. And then we are done with the accumulated depreciation account. We need to go and prepare the depreciation account. Let's go and prepare the depreciation account. Remember, we have properly balanced the accumulated depreciation account, right? So let's go to the next account just to show this is a balanced and properly balanced accumulated depreciation account. So let's go to the next account right there, which is depreciation account. So depreciation account is an easy account, this one. As long as you have prepared your accumulated depreciation account correctly, then depreciation account is very easy. So you are just going to say to put the date of the end. So it's going to be 28 February, right? And then when you come this side, is going to be accumulated depreciation, double entry system, remember, or duality principle, accumulated depreciation account, right? And then you're gonna say general GJ right there, the amount you're going to take, this amount, this one, right? Don't have to indicate calculations already, you did there. Now you're just applying the duality principle or the double entry system, all right? And then that's the only depreciation we have, which is going to be closing of 226, and then even on the other side is going to be 226, and then we are going to close this with the profit or loss account. And then profit or loss account, and then is going to be general of 226, and then we are done. This is how we balance properly the depreciation account. It is properly balanced like that, right? And then others are asking why profit or loss. Why are we closing with profit or loss? Remember, depreciation it's an asset account. It's an expense account that qualifies to go under expenses in the statement of profit or loss, or profit or loss account. So that is why we close with the profit or loss right there. So let's proceed. Now we are going to prepare the asset disposal account, because we are done with the depreciation account. Remember, we are closing with the profit or loss because depreciation account is an asset, it's an expense account. I mean to say, not asset, expense account that qualifies to profit or loss, right? So let's go and do the asset disposal account. So the asset disposal account, very easy one because everything is just provided and given. So what we are going to do, we are just going to transfer things. So here we are going to say, put the date on the end, at the end of the year, 28 Feb, 28 Feb. And then we say equipment. Even here, we are going to apply the double entry system or the duality principle. General right there. And then amount 900. Remember this 900 now, we know that is the cost for the disposed or the sold equipment, but we're also taking it from here, from the equipment account, this one, right? We're taking it from here and we apply the double entry system or the duality principle. We bring it to this side, all right? And then we come this side. We also put the date for the end of the period, 28 Feb. 28 Feb. 28 February right there. And then we come on the details, we say asset disposal. No. We say quick accumulated depreciation. Accumulated depreciation. And then accumulated depreciation, we are going to take the one on the debit side of the accumulated depreciation account return asset disposal. We are applying the double entry system. Are you with me right there? And then we go this side, we say general there of 2, how much is that? 23, I think it's 238. Let's just double check that. Yes, 238. We come here, 238. All right. And then now we check. They say they sold this, right? They sold this so for cash. So we say bank. Remember, we sold for cash. So we are receiving this money. So it's gonna be under cash. When we receive the money, the following is gonna be cash receipt journal. All right. But let's go and check how much is the amount that we have received. We have received 720. We have received 720. All right, so we go and record 720 for that equipment, right? So now we are done with everything that is needed in the asset disposal. We just need to determine whether we have made a profit on the selling of that equipment or we've made a loss. So we're gonna determine this like this. We check which side is bigger. So according to me, and according to this information that we've put in the asset disposal account, the credit side is the bigger side. So let's see by how much. Let's calculate that. So 238 plus 720, I'm getting 958. 958. All right. So that is the closing balance right there that you're gonna put here, 958, and then even this side is gonna be 958. So now remember, if like this, if the credit side is bigger, if the credit side is bigger than the debit side, we have a profit on sale. We've got a profit on sale. Profit on sale or profit on sales. Profit on sales. So profit on sales is going to be 958 less 900. 958 less 900. I'm getting a profit of 58. That is our profit, and this is our asset disposal, and we are done with this additional information. Nothing else right there. All right. All right. So that is your asset disposal, that is your depreciation account, that is your accumulated depreciation account, that is your equipment account. That's where we started, and everything seems to be all right according to the question paper that we have been given or provided for. And then this is our calculations for depreciation, and I've explained how and where to get this, because most of the time people struggle here, but this must not be a problem anymore because you've got me right now, right? And then this is our question paper, and if you need it, just send me or put a comment on the video, and then I'll be able to respond to you. All right, so this is the end of the session, and please do not forget to subscribe, like, and share. And remember that we also offer private tutorials. Our private tutorials are online, are also face-to-face, depending on the area that you are, and also what do you prefer, right? So this is our session, the end of our session, and salute.